Boom shakalaka, with ever-growing pessimism about the overall markets. Today's video, we're going to take a look at how this is going to affect Bitcoin. You'll definitely want to stay tuned. What's up everyone, Randall here from Crypto Love. Today's video with a lot of interesting charts about the overall markets, also about Bitcoin and cryptocurrencies, including the overall pessimism, and will this affect Bitcoin negatively or positively? Before we get into it, guys, make sure to like, subscribe, click the notification bell, come join us on Twitter at the Crypto Love. Push that like button. Now today, fear and greed at 50, not fearful, not greedy, right dead center. The overall market down 1.6% today. Bitcoin at 21,970, Ethereum 1550, BNB at 285, XRP 37 cents, Cardano 32 cents, Polygon $1.12, and Dogecoin 7 cents. And like we were talking about in yesterday's video, Bitcoin has broken down. We put this wedge right here. We said that likely based on everything, Bitcoin is going to break down. It has broken down. It could fall down considerably more onto the levels roughly around $20,000, especially when you take a look at some of these overall pessimistic market-wide predictions. You see, according to this, every time the Philly Fed Manufacturing Index dipped below negative 25, this dotted line right here, a recession took hold of the economy. We saw this in 2020, in 2008, 2001, 1990, 81, 80, 73, and 70. And right now, we are right on the border. Now, blame Philly for everything, because wasn't it just a couple months ago when if they won the World Series, it would have caused a recession? So they lost the World Series, and now the Fed manufacturing. I mean, can you believe it? Now, a couple things to note here. One, there were a couple other times, like right here in the late 90s when it came pretty close, and also probably around 2011, came pretty close, never got down to those levels. Also, look at how many recessions we've actually had in the past 50 years, you know? So maybe a recession ain't that terrible of a thing. But also, a lot of people are saying, hey, we've reclaimed the downtrend, broken back above it. Well, it turns out that the S&P broke the downtrend line and investors are getting excited right here, case in point. However, this has happened in every major bear market rally since 1960. Look at this. Broke back above, everybody was celebrating, and then boom, tanked. So we may still have boom, tank a bit further down to go. And if that's not enough for you, turns out that the stock market only bottoms after unemployment rate rises. Right now, we have record low unemployment rates, not rising yet. You can see each time here where it rises after, and the bottom was in after unemployment rises. So we haven't seen that happening just yet. The bottom may not, in fact, be in. Now, Bitcoin's most recent dip, likely due to long-term holder sellers selling, long-term holders selling. You can see this right here, this red area, long-term holders selling with the retail hype buying on highs. Well, you know, moving from weak hands to strong hands, from strong hands to weak hands. So it's not good for Bitcoin, but the long-term holders were selling. They already got their profits. They bought at 15, sold at 25. That being said, Bitcoin is still right on the bottom of a multi-year long, almost a lifetime long uptrend for Bitcoin. If this doesn't hold here, if this buy line doesn't hold for Bitcoin, this is going to change the whole narrative for Bitcoin. So we are at very critical levels for Bitcoin. We did just have some pretty recent bullish signals firing like this, the 3-week logarithmic MACD bull cross just happening. Historically, when this has happened, has been the beginning of bull mode. So based on that, it would be pretty optimistic for Bitcoin. Not only that, we have a Bitcoin diamond pattern playing out, which is seen in 2020 as well, right back here. This happens between uptrend as an active consolidation. And I mean, Bitcoin at that point went from $17,000 to $42,000 at the point. So could we see the same type of thing where Bitcoin goes up to $40,000 at the same area? Certainly could. Not only that, but we have these diamond structures, or basically wedge-like structures with breakout, wedge-like consolidation, and breakout, wedge-like consolidation, and subsequently breakout for Bitcoin. So over and over and over again, while the overall market looks absolutely terrible, things for Bitcoin look not that bad. You sometimes have to zoom out and not pay so much attention to the smaller time frames. The macro view of Bitcoin is crucial. We're close to the blue dotted line the breakout begins, new bull market for Bitcoin begins. So this dotted line right here that we just got rejected from, can we break through there? That would be a big breakout for Bitcoin, which brings us to some very interesting charts. This one here, besides looking cool, so far everything about this cycle seems to be normal, if you can call such a simple cyclic pattern normal. A shift of 400 days aligns previous tops and lows. In your opinion, is the Bitcoin cycle aligned with economic cycles, or is it the halving cycle? Are we just waiting for another halving? Is it really that simple? Could it be that simple? It could. Nobody will know until after the halving. But is it more aligned with economic cycles? Are we going to have Bitcoin crashing with an economic recession, or are we going to have a decoupling, as once was true with Bitcoin and the overall economics? So this is just interesting because you just delay the peak 400 days and it just lines up. Bottoms and tops and bottoms line up almost perfectly for Bitcoin. Not only that, but you may be thinking, how is Bitcoin in a bull market? And I ask myself on a regular basis when I'm making these videos, how is Bitcoin in a bull market? Well, price action has been terrible, down and sideways in a bull market. The bull market has only just begun. Take a look at the long-term holder realized price, which is this line right down here. After spending the second longest amount of time under, the cross is here. So you can see Bitcoin does spend time under the realized price. And then the start of the bull market is when it breaks back above. So again, we had under for 10 months right here, breaks above, start of the bull market. We had under for 5 months, breaks above, bull market. We were under for 6 months, just recently broke above long-term holder price, roughly around $20,000, those levels I was talking about earlier. Should we stay above there, this could be the start of a bear market. Headed where? I don't know. If you just take a look, if Bitcoin is correlated to the halvings, let's just say if. Well, historically, 500 days before is slow growth, 500 days after is parabolic growth. This could set us up for $200,000 to $300,000 Bitcoin. I would say $100,000 to $300,000 Bitcoin, but that's just me being conservative. Anyways, that's all for today's episode. If you did enjoy that, make sure to push the like button. I'll catch you guys later. Have a good one. I love you. Peace.
If you don't think Bitcoin's going to $1 million a coin and then $10 million a coin, you're already a loser.